Backyard Shoes is question one. Backyard Shoes is a retail business located in Nairobi, Kenya. It sells a wide range of shoes, handbags, and accessories for ladies only. Backyard Shoes has 3 shops in Nairobi. The shops are located in a business shopping center where there are other shoe shops. So if there are other shoe shops in that center, it means Backyard Shoes is located where there are competitors. We get to use this information as soon as we start answering the question. Question A, Roman figure 1. Which one of the following is a method of secondary market research? When we talk about secondary market research, we're talking about field research. So this research has been carried out by a researcher, but you are using the information for your own research. That's what we call secondary research. Another name for secondary research is field desk research. So question 1, they said, which one of the following is a method of secondary market research? Number 1, A, questionnaires, government reports, surveys, focus group. Questionnaires are primary research. You can ask a question from a respondent is a primary research. Government reports are always secondary research because it has been carried out by someone before you. So the answer is B. Surveys, it's a primary research. Focus group is also, surveys is primary research. Focus group is also a primary research, which is qualitative. So the answer is B. Question 1, Roman figure 1 is B, government reports. Which one of the following could be a financial objective for the owners of Backyard Shoes? When we talk about financial objectives, we are talking about objectives that are of monetary reward. Personal satisfaction is not financial. It's your reason you are happy having the business, so it's not financial. Increased production quality, it is not financial. Increase market share, because when your market share increases, it means your revenue would increase. That is financial objective. Loyal employees is non-financial. So the only financial objective here is C, market share. Roman figure 3. Which one of the following is an external source of finance for the owner of a business? External source as finance that you get from outside of the business. Bank loan is an external source of finance, so it is A. But let's look at other options. B, retained profit, the profit the business make. So that's internal. Internal source of finance are those finance that has been sourced through within the business. So retained profit is the profit made by the business. Putting it back into the business is internal source. Personal savings, the savings of the owner of the business, it's internal. Selling assets, when the business sells its own assets to raise finance, it's also internal. So the only external here is A, bank loan. Clear? Yes. Roman figure 4. Which functional area would be responsible for quality control? When we talk about quality control, it's about the quality of the product. It means you are checking quality at the end of the production. That is quality control. So it is about production. Marketing is marketing department. Human resources is about recruitment. Administration is about coordinating each department. So it is not A, it is not B, it is not D. Quality control comes from production, which is C. So Roman figure 4 is C. Clear? Roman figure 5. In February 2018, Backyard Shoes imported 50 handbags from Italy. Each handbag cost them 20 euros. The exchange rate in February 2018 was 1 euro equals 124.48 Kenya shillings. How much did Backyard Shoes have to pay in Kenya shillings for each handbag imported in 2018? So 1 euro is 124.48, and they bought 20 bags. No, each bag is 20 euros. So the Kenya shillings that will be paid is, if 1 euro is 124.48, and 20 euros will be 124.48 multiplied by 20. So it's going to be 2489.60 Kenya shillings. So the answer is A. Clear? Is it clear, please? Yes. Roman figure 6. In September 2018, the exchange rate was 1 euro equals 117.79. In 2018, 1 euro was 124.48. Please look at the paper. In 2018, 1 euro is 124.48. In 2019, 1 euro is 117.79. It means to the Kenya shilling, the Kenya shillings has appreciated against the euros. And if the Kenya shillings has appreciated against the euros, what happens to importation? That's the question. What effect will this exchange rate have on Backyard Shoes if the cost of an imported handbag remains at 20 euros? Now that the Kenya shillings has appreciated against euros, it means the value of imported products would fall. So that means the answer is the cost of importing a handbag would fall, which is D. Because as soon as a country's currency appreciates, the value or the price of imports will fall, but the price of export will rise. So the answer is D. Is it clear? Question B. Now, I'm still using it. Define the term stakeholders. When we talk about stakeholders, we are talking about groups of people or individuals that have interest in the business activities. That means the success and the failure of the business. That is their interest. That's why we call them stakeholders. Is it clear? Roman figure C. Define the term quantitative data. For quantitative data, this is a data that is measured and it's represented in values or numbers. Clear? Is measured by values and represented in numbers or as numbers. That's why I call it quantitative. It's about numbers, numerical figures. Numerical. Roman figure D. Question D. State one method backyard shoes could use for on-the-job training. When we talk about on-the-job training, this is a kind of training that is carried out within the premises of the company. Example here, I use shadowing a fellow shoe fitter, because backyard shoes make shoes, or they fit shoes. So one of the on-the-job training that you could use for your employees is shadowing, checking what they do from a distance. So the answer, that's shadowing. We go to Roman figure, question E. Yes. We have revenue, cost of goods sold, direct labor, total cost, gross profit. We are told to calculate the gross profit margin. Gross profit margin is gross profit divided by revenue multiplied by 100. Gross profit divided by revenue multiplied by 100. That is gross profit margin. So here we have our gross profit. Our gross profit is 500,500, and our revenue is 570,000 multiplied by 100. It gives us 50,050,000 divided by 570,000. So the answer is 87.81. 87.81. So that's question E. Is it clear? We go to question F. Have this. They said, explain one way a business could increase its gross profit margin. If a business has to increase its gross profit margin, it can negotiate for cheap suppliers. When a business is able to negotiate with cheap suppliers, it means the cost of production would fall, allowing the business to sell at a reduced price, which will bring about increased revenue. Because when the price of your product is reduced, customers will be willing to buy, because customers are always conscious about price. As a result, your revenue would increase. Is it clear? Is it clear, please? Yes. Question G. Analyze the importance of backyard shoes of satisfying customer needs. That is where we talk about the competitors in backyard shoes. So backyard shoes is located closer to competitors, which means if the needs of existing customers are not met, they may switch and start buying from its rivals. They said backyard shoes, its company is between other competitors. So if the needs of customers are not met, which is satisfying them, if customers are not satisfied, they will switch from buying from backyard shoes and start buying from its competitors. That's number one. Two, backyard must ensure high standard always, as this will bring about customer loyalty and this will positively impact on revenue. Backyard shoes must continuously provide higher standard products. If not, customers will not be loyal. Customers will start thinking about competitors, and that would reduce its revenue. Is it clear? That ends question 1, I think. Yes.